So this was kind of like that area where like, hey, 60, 61, 40, we got really close and we just tested the top of this. I'll say, this is one of those where like, okay, right about now is where we could. So the market it's just super choppy. We said last time it was trappy. I still think it's a little trappy. It's it might.
To your credit, that was the word of the week. And
Oh yeah,
we've had many traps since then.
I just hope it's not the word of the month, if that makes sense, because it very well could be. It very well could be. So, what do you do with that, right? So, number one, you make no big decisions, no major decisions, and if you're trading short to medium term, you either sit it out because it's going to be hard, or you take gains very quickly and losses pretty quickly also, and you play with a smaller amount of money, right? Because until we have very clear, clean direction, you're going to have a lot of head fakes, man. And I mean a lot of head fakes. So Palantir doesn't look horrible, right? Like right here for actually possibly a big bounce. And tomorrow's a big day, right? So we get into CPI. I was thinking the NFP was going to come in weak. It came in strong. We didn't get any revisions. And we're just kind of digesting that. Tomorrow, CPI, that's the market's favorite tool, right? If it comes in and we pop up, here's the thing. Tomorrow could be the biggest bull trap of bull traps. Today could be another bear trap, right? So if we pop up crazy, and so this is what I'm saying, Palantir is going to be a perfect example of this. If Palantir pops up like into the 70s, let's say mid 70s, and even it gets in right in here, this is where a lot of charts are. That's where the bears are going to be waiting now, right? So anybody, and this is how you kind of have to look at this, anybody that's like up here that might have been a short-term trader could be waiting for exit liquidity in the mid 70s. So as an example, if we get a big pop, it doesn't mean that it's going to drop like crazy, like we'll talk about your Tesla trade here in a little bit, because we had that whole thing like lined up both directions. It could get a little fade, but it'll pull back. And this pullback, if it does, if that pullback locks a higher low, that though is probably a better entry point. Does this make sense? I would be happier buying a move like this after a pop up, pull down, big one. This would be like, oh, you're up 10% one day, you're down 10% the next day. You're like, what the hell happened? And then if you hold this level, so what I would say for this is call it 68. So if Palantir, and this is going to be true regardless, if Palantir started to close over $68, we're back into some positive momentum, but it puts it into a bit of a congestion pattern, right? And so if I were to play this forward, and this is, the chart's not here yet, but here's how it's going to look. Now you might be able to see a little bit of a different view after I just added this one line, right? So if I add this one line, you'll see where 75, give or take, becomes an area of congestion. At least there's a lot of overhead supply, and I would expect it to take a little pullback literally right there. And then if it pulls back down and holds over 68, then we could be out of the weeds. And this, if you connect this high from December 24th, Christmas Eve, and January 6th, NFP, where's the NFP? January 6th high, connect these two highs. Essentially, this is a consolidation or it's a potential downtrend that's forming. So for Palantir to actually be out of the woods, it's got to be beyond this. And no matter how you slice it on Palantir, this is going to take time. So to my earlier point, don't expect to be like, boom, V recovery necessarily, because it would be healthier for Palantir to actually consolidate inside underneath 75, but above, let's call it 68,
right,
for a little while, and then kind of go sideways, because this might even play out like this here, and you might get another like test and eventually go higher. That would actually be the best way for Palantir to start trading. But this whole situation, this could take you to February. So it might not be this month. Does it make sense? Chat.
It makes a lot of sense. And so do you think the current price action basically holding above 65 is bullish?
It's neutral. So it doesn't have to be bullish or bearish, right? It's short-term bullish, but long-term neutral. So short-term bullish in terms of we could see it pop right into that 75, but you know, if you were long Tesla at 388 yesterday, we would have told you to go long to 415, give or take. That was actually my target. We got to 420. And you're going to run into this overhead supply, which needs to be a sell. So you need to take some profits if you're a short or medium-term trader. If you're long-term investing, it's a whole different deal. You do what you want, right? And you just accumulate shares. But yeah, this is the setup, right? So if you do get a bounce on Palantir, it can be aggressive. It could be even like this aggressive. It's possible. Even still, all of that, still take a little trim near dated, maybe sell some very short-term calls because you might get a little pullback and then potentially you can get a little bounce. But any way you slice it, connect these two highs, you will see a new kind of like prevailing downtrend. And essentially, if I were to draw this, like stocks take a while sometimes. Just because it's consolidation, it can go like this before it eventually goes like that, right? So right. That said, this whole area, this is $60, still becomes the best spot to actually hold. But if it doesn't, you know, that's okay, right? Because you still need to, what's going to happen is you have to establish the bottom end of whatever this downtrend is. So even if I come back way down here and put that up here, now you see it's like, okay, this could actually be like a really wonky consolidation, right? So you want to be really cautious because this could come to a crazy head.
That's fair. And I think going into earnings, the biggest catalyst will be that growth guidance that they put out as well.
Yeah. So, I mean, I'm looking at Palantir. I'm like, if I saw $60 or even sub 60 for a minute, I might personally think about selling some puts potentially. But it's not necessarily one where I would think about buying calls in that case, because I think it would be done going down. But what I'd like to see is some kind of sideways price action at some point like that, right? Which means that if I bought calls here and I have to wait 3 or 4 weeks for it to actually make a move, it might not be good. So depending on volatility, depending on the pricing of options, we could take a look at earnings stuff when we get a little closer. And there might be some good juice that we can squeeze out of those.
Okay. Can we do the latest company that I've become a shareholder of?
Congrats.
The volatility here is pretty damn aggressive. What the hell is going on with Tesla?
Dude, really? You're surprised at this one? Dude, you're come from Palantir, right? Like, come on,
Palantir just went up last year. That's all it did, dude. It's like
right. So it's very much the same thing. If you were watching our weekly trade plan yesterday, these things are. If you're watching our weekly trade plan, I think we're good on audio, right? I don't need to do anything.
Oh, you're perfect. You're perfect.
Okay. So this 390-ish level is like the first area of, okay, we can see some people starting to show up, right? This, I'm going to move this forward just a little bit till I think it was Monday. All right. So Monday morning, we were looking at this, and I actually had this as in Monday morning when we had this candle here. It was like, okay, now you can actually expect to have a pop, right? So you have this kind of downtrend, just like this, another one of these, right? But just like how this was a pop that could get shorted into, you needed to be really careful because over here, you had the same situation. You have sellers or basically like liquidity up here, people that went long at the absolute highs, that it ends up being a short, even though this is a $40 or $30 move from 430 up to 460. That's basically exactly what we're looking at. But on this time, in this scenario, we're looking at this block here of see where they were buying all here. So this becomes your overhead supply, right? So resistance, if you will. Do you follow like support, resistance, support, resistance? So you need you're buying at a this 390 is not a super strong support. Remember, to me, stronger support is in the 350s. I still will say that. I think that's an area where I have a lot more confidence, but knowing that this setup was here, we had the ability to see a move on Tesla just like this. See this? It's even on, this is a 30-minute chart now. So you can see all this little stuff. You know that there's some very near-term technical traders that would have been like, oh, if we see this, you're going to get a little bit of a pop. And where would that pop take you? I had 315, which was really just going to be from here into this area, 415, sorry, right here to that line. So that's where I saw it going. And it could have potentially gotten, to me, it was like 420, give or take. And that's what happened. But the whole time that we played this out is like, look, this could be target acquired if you get there. I didn't think it was going to get there like in a couple hours. That was crazy. But you get here, and I think that's exactly what happens. So you run into this overhead supply.
Wait, explain that. What do you mean by overhead supply?
So anybody that was buying here, so this is what you're dealing with. Basically, people that in the first scenario, remember, people are still trying to true up their portfolios, figure out how they want to be positioned. So if they bought at the highs and they have an opportunity, like they don't think that they got a good price here, or they think they'll get a better price later, if it gives them an opportunity to exit and then re-enter again later, then they're going to probably take it. And that's what happened right here. So when we looked at this pop on Tesla off that 390 level, it was the same scenario. You have I'm using a 30-minute chart, and I like to use a 30-minute chart a lot because I can see this very clear to me. So you see this type of price action where like they're kind of stepping in here, right? Like right there. You see them step in again. You see them step in again here. So this price action to me is like clearly someone buying. But the thing about that is like at 390, whoever was buying here is now underwater, right? So they have to think, was that a good entry or was it not a good entry? Right here, this is where this was support, so prior support. Here, it actually started to become resistance. So we saw this situation here initially where it was like a little bit lower, and they actually exited stage left. So this seller, which was from this area here, this is from like early December. Whoever was buying in early December, there's a seller that started to exit right around 410. They got an opportunity up here. They probably waited, but they ended up taking it the very next day. Again, exit liquidity for them.
So overhead supply is the bag holders, is your point?
Overhead supply is like the late entries who think they could get a better price lower. They're sellers, short sellers.
Okay. Gotcha.
So like you could be shorting the stock, but honestly, it's not like they're shorting this. I don't think that they're shorting the stock necessarily here, but it's more like people are selling their positions, their longs.
So at 422 this morning, you think the reason it then took a dip was because it ran into the overhead supply. That's your point.
I mean, sure. We can say I think that, but it's what's true.
Okay. So you're saying objectively that's how it technically played out.
Yes. that is what happened. You ran into sellers at 422 today, right? And they may. So what you have to have happen is eventually you have to have these levels. So right now your buyers are here at this 390 level, right? So this is where the buyers are, and you can see that pretty clean right here. So they're stepping in. Some buyer or buyers, who knows if it's more than one, we don't know. But market participants, some market participants are stepping in this area. I could actually make this a bit bigger of a box. let's say we could do down to here, right? This is potentially down to 388, but this is where they were. This is where someone is buying, right? You can see they started buying over here. This is this area from these lows, and they're definitely stepping in here. But whoever's buying down here, here's what's also true. Whoever's buying down here is not stepping up and buying again up here, right? Because if they were, then we would have seen at least this 415 area hold. And so where we are, you're trapped in between. This white line is the 20-day simple moving average, and that blue line below is a 50-day simple moving average here. And so the 50-day is clearly, it's sloping up. 20 days trying to slope down. The distance between them is starting to like condense. So remember, the distance is shrinking. We're in some kind of a consolidation phase. And at this point, like when you see, okay, we're in consolidation, this is starting to, you can have it become a little bit clearer all of a sudden. You start to see this. So right here, right now, you kind of want to see them step in, because if they fold, if these people that were buying here around 380s, mid 380s, if they fold, then you're probably going to see that sub 360 retest in this area.
Right.
Which you, sir, sold some 375 puts, I believe, correct?
Yeah. Yeah.
For, was it February?
131. So right after earnings.
131. Okay. But you pulled in what, like $1,500 or something like that?
About
$2,000. More than that.
No, $1,500 off 37,000 in collateral. I only sold one. I only sold one put.
Okay, so you pulled $1,500. So that would put your net cost basis at 360.
Exactly. Yeah.
Which you would probably be a buyer. I would probably be a buyer there anyways. Yeah. So in your situation, I would be totally, like Switzerland on this whole situation. We're like, it's probably better to go sideways for a while. And then if I do see sub 360, I would probably I'll probably end up buying some shares sub 3. If I see like 350s or lower, I'll probably pick something up. And then I might, in addition, as optionality to get longer, I might actually buy more, or sell some puts while I'm buying shares, if that makes sense. There's one little hiccup I would note, is that there's a clean session gap from November 18th. Don't know that this, just because there's a gap doesn't mean it has to fill, but there is a legitimate session gap where there was no trade between 320 and what is that? 327. So there's a inefficiency or deficiency, if you will, in the market, literally right here, that sometimes if something really weird happens, you might get a quick flush. I don't think this is going any lower than this to me. But that would be where I would be like, okay, I'm going to sell, I don't care, like a bunch of stuff except for my hood, and I'll probably just get heavy with you. But in this area, generally speaking, I mean, this, by the way, this could happen in the pre-market or it would be like a flash. Like you wouldn't even, if you weren't trading that day, you probably wouldn't even notice it. But I have a lot more confluence in this area than I do up here. For now, though, this is kind of like your consolidation area, and this level here is super important, right? So this is like 390. Give or take, and see, like on the right hand side of my screen where it really peaks out right here, that's important, right? So this level needs to hold. If it doesn't, it's going to be a quick whoosh, and you might have an opportunity to pick up a little bit lower.
Okay, I think that's fair.
It's like, damn, I thought I had it.
Like, if we get it at 375, we get it at 375. It is what it is.
Yeah. But you're not fully positioned anyways, because you need at least 1,000 shares. I'm pretty sure.
Yes, 100%. 100%. We got it. We're 10 shares.
So Amit's in 1/100th of position right now.
Actually, 11 shares. I have a physical share too. So.
Oh, nice. There you go.
All right. Can we do NVIDIA? Because since we talked, NVIDIA went to 153 and now it's at 130. And we've had a lot happen since then.
Yeah. So this was kind of like, I think this is what we were talking about. Was this us? This has got to be us from some time ago. Sorry. Sometimes I just have our drawings and I don't.
If it's at 123, it's definitely us.
No. It was earlier from this consolidation area. So we're here right now in the bottom of this box. So remember this box, I'm going to zoom out just a little bit and take us to this moment in time. So I don't know if you guys remember NVIDIA in this big consolidation. So this consolidation was a big one, right? And we were talking about this whole situation. And this was like a key area to finally get over after we had broken up, right? And so now if I pull this, do you guys see this? I know my moving averages are getting really tight in the screen, so it's a little funky to see. So now if I pull that over, this is interesting. So this still remains right now, the local lows at 127 down in here. And I still think, hey, look, so tomorrow after CPI, then what do we have? Then we have inauguration and then earnings season kicks off and then we have FOMC midweek. So I'm a buyer here on this retest.
130 at 130.
Yeah, literally today. Because I said the other day, like we were looking at the option chains, we had those crazy strikes that were way out there. And that was like right off of this level. I think it was right here. And I was like, I got greedy because I didn't take them. I mean, fair enough, I didn't take them. But today, off these lows and this retest of this is the box, right? I'm literally looking at this right here. I think this becomes that key area for now. And I do know that, hey, my downside to me is that 120 area. So at this point, like I can look at this and say, all right, well, is this kind of like, I know my risk pretty well, if that makes sense. So if I know my risk is, $10 or whatever to the downside right in here, I'm okay. But I know that like 127, this box, like I have a decent amount of confluence. So whoever sold, so the people that sold right in here, and it's the same exercise as before, where like they sold, right? But then they became buyers over here. And then they became buyers over here. So do I think that they're going to continue to accumulate here? I think so. At least that's the bet. That's the actual bet. And I know that we're not completely out of the woods yet because this is still, again, this is more consolidation. You can take this however you want to see it. I guess this is like way over here. What is this yellow line? Oh, that's too steep to be anything. This is I would see it as this is where they would want to jump up and we'd retest essentially this whole kind of area. But this 120s would actually be that's the downside if this area doesn't hold. But it's pretty tight risk reward because this becomes your stop. 127.
Right
in here. So taking it long here at like 130, I'm risking $3 ideally. I mean, assuming that we don't have like a crazy gap down and I can't exit, which is possible. But it's very much about this box right here and how the buyers and sellers will react from this area and are still reacting. So I'm betting I'd be making a bet that they're they're still here and they're starting to reload.
Why do you think it wasn't able to hold that 153 level at all, or the 150s?
I mean, you can slice that a bunch of different ways. You could speculate and say, hey, look, the market, I wouldn't put it past a bunch of people to be like, oh, the market makers wanted a better price because that moved too fast for them to get through. I don't know. You know, that move, again, this is like a broader trend.
But that was weird, wasn't it? Like 129 to 153 and then gone within probably like an hour, 2 hours max.
Yeah, it was. No joke. I'm trying to get this larger channel. So yeah, this is the channel right in here. So this is a daily view. I'll just take these lines off for a second. So this is kind of why I'd be okay buying this, right? Like, is this like a little bit better view? So I'm still betting that, look, the mega caps, as they start to report, they're probably gonna be saying, hey, look, we're gonna be spending a whole lot, whatever. I don't know. I think maybe it just got a little overheated. In certain technical analysis, this might be a little advanced technical analysis, but this pattern right here, I'll be honest, it does look a little, the word is like distributionary. If you know like Wyckoff is, I don't know if we've talked about that, but this is called like an upthrust right here. And sometimes it's like that blow off top. And I think this day was like epic volume. So I think the market's kind of scared in general, and maybe taking profits ahead of earnings. I just don't see why you would want to do that on NVIDIA. And maybe I'm biased, right? But this is how I see NVIDIA here now. I'm going to know if I'm wrong at 127 and change. But even then, it's like longer term, I'm not going to sell any NVIDIA. But that's where I am right now.
All right. I think it's fair.
It's a tough spot. This is the whole thing. Like, the market's trappy. So I'm thinking that this is a bear trap. I'm hoping that this is a bear trap on NVIDIA. But I'm open to being wrong quickly with the small dollar allocation. I'm medium dollar allocation.
All right. Let's go to a stock that got a pretty big upgrade today by Mr. Morgan Stanley, which is Robin.
Look at these guys with their cost bases are NVIDIA.
Damn, some of you guys were early, bro.
Yeah. Well, I mean, that's not even that early, right? Well, actually, I think 180 is
$18.90 is pretty early.
No. It was a screaming buy, $8 or whatever it was.
No, we're talking about NVIDIA.
Yeah. Split adjusted. That was 90. So here.
Oh, okay. I see your point. Yeah, I got you. No, that's fair. Okay, yeah, let's do Hood. They teased us today. Got up 10%.
Oh, dude. I mean, I'm so happy with Hood. Just saying, like, I look at this thing, I'm like, man, this thing every time I'm like, the market's getting a haircut. Hood is not, right?
It's stable.
It is stable. One thing that's true is this $44. Let me see where this level comes from. This comes from over here in the IPO days. Not that that's super relevant, because that was a very long time ago. It's like a breakdown level. 43.40. See that? This area. So that's actually what we're toying with, technically speaking, right there. But that said, there's this other term that there's like no such thing as a triple top. I'm kind of looking at this like, okay, 1, 2, 3. This is attempt number 4. I think she cracks, dude. I think it happens.
Cracks to the upside?
I think so. I could be wrong. I could be dead wrong.
I've got 45 in my mind. Are you thinking that's where it cracks up to? Or are you saying
let's figure this out. I didn't even think about that because honestly, I don't trade Robinhood. Does that make sense?
Yeah.
I don't. I just buy it. um. Oops.
Guys, we do have some breaking news here. Anthony Noto is joining the board of directors of Warner Brothers Discovery.
Oh shit!
WBD's up 1% on that news.
Is it over 14?
No,
or is it still under 10?
SOFI is 14.53.
No. WBD.
That's at $9.
Huh?
Nothing too crazy there. That's interesting, dude. We'll talk about that when we get to SOFI, but that's an interesting.
Yeah, I asked you about WBD a long time ago. You're like, I don't like dead rating companies.
Well, Steve loves it.
I don't hate it, dude. But there's a lot of debt. I'll give you that.
72 billion in debt is a little bit more than a lot of debt, bro. It's you sound like Steve, right?
Do I? I like Steve, except we don't have the same view on Ripple. Okay, so the hoodie. This is super interesting. So I'm looking at this here. So this is the consolidation that we're in that I'm measuring from here to here. So I'm measuring this as the box. If we get one more liquidity grab towards that 20-day, see, this is where it's going to get interesting is if this thing goes any higher, Amit, this 20-day starts to curl up and the 50-day is going to be there. And we're back into that simple moving average expansion,
right?
Any higher, which is where you get bigger moves. So, no, not 45, 53.
Okay.
But first stop would be 50. First stop would be 50 here, which is 1/2 of this box as a measured move, and a full extension is going to be 53.80. So fully duplicating this consolidation. 50% of the way, that's going to be right in here, just under $50, right? And then 53 on the extension. Does that make sense?
I mean, they're going to have the growth to justify those numbers. I think they will.
Yeah. I mean, and I'm just like, why do I even own it?
It's an incredible chart, an incredible story as well. It's resilient.
Can we do this?
And the best thing is any dip is like they have $6 billion in cash. The enterprise value goes down significantly. Like it's an easy dip to kind of buy. Management has $1 billion. They can buy the dip.
We do this thing was $84. I don't know if we really count that.
But 80, yeah, I don't count 84 in 2021.
What can we count this?
Maybe. I mean, I don't know, but every upgrade we're seeing is
that's 95.
Yeah, that would be 95.
Okay, but legitimately, I'm doing it. I'm doing this. We're forecast. So there's a difference between a forecast and a technical trade and investing, all that stuff. Totally different. Forecast is just forecast. So if I were to forecast this like a Palantir, if this is the box of consolidation, right, and we actually break out of this, you following here? It takes us to 80,
which is where we were before at one point.
Takes us to 80. You heard it here first.
Well, here's another thing that none of us are mentioning. Robinhood is eligible to be part of the S&P 500 this year.
Listen, all I can tell you is that the second they go into the NASDAQ, I'll probably sell it. Because every time the stock has been put into the NASDAQ 100, it's like a sell signal, man, this last year.
My thing is, dude, they're having 3 events this year. Like, we know there's even more products coming out. So it's just like, it's very exciting.
I don't hate that, man. I don't hate this $80 target at all for like the next year or so, year and a half, maybe.
Yeah,
I really don't hate that at all. I know that's below your target too. Your target's more like this 115.
Well, I said triple digits over the next 5 years. That's what I said last year. I mean, I don't think that's super optimistic or super conservative. Triple digits in the next 5 years. I think that's. I need to see them get to 500 billion in asset.
I'm beneficial. I don't hate 80 for 2-3 years out either. Yeah, like not at all, really.
Not at all. Not at all.
But here's why this moment is so important for the hoodies, us hoodies, is that if we crack through this 44 level, that's what this trade becomes.
Yes.
And everybody else is going to be looking at exactly what we just did, right? All of a sudden. So as long as you know, and I don't know that I've seen that chart. Have you seen anybody put a chart like that out there on a measured move for Robinhood from this base to extension?
No, no.
But that's where we are. So again, if we crack through, yeah, sure, $50 for a stop, but
dude, even if we get to 55, 60 this year, that's a 54% gain. I think a lot of people would be happy with that. Like a lot of people.
yeah,
I'd be very happy with that happening. So
what's 100% gain or 50?
Yeah.
But this is why this level is so important and this moment. And I think it's a winner in general for the next couple of years. It's hard to say anything like that for like 2 or 3 years out, barring anything crazy that happens.
So hold on. If we get into high 20s, low 30s, how do you buy? Is that
no? Well, it's 25, right? Like so I already did my buy at the 35. I hope that that's gone. If we see it again, and at like 34, 35, if we see 34, 35 again, and we instantly bounce back up one time, I'll be in it, right? That's 35.72. I'll still be adding. That's the 50-day simple. But it's this area right here, 33. I think it could get ugly, be below 33.90. It could get ugly. Yeah. So below that, I might trim it down to underweight and then wait for 25 again. And then reload the boat around that 25 area. But as long as it's holding 35, I'm kind of bulled up on this bad boy, man. Just saying. Well, look, we did the numbers. Again, this is one where like this has become like one of my largest holdings, if not. No, it is. Is
it your largest holding? Really? Wow. That's
because I just keep buying dips. Like I'm like, I don't know what to buy today. All right, we'll buy some hood. Because I honestly, like a month or so ago, I went like 60% cash straight up. And so like I've been trying to find dips to buy. Like I bought Shopify the other day, just under 100. I'm looking at picking up some more Boeing because I don't have a full position on Boeing. I think Boeing could have like a GE type setup here. And I mean, I like Meta, even Meta getting shellacked today. I ended up trimming some of my GE and rotated a lot of that into GE Vernova. If you know what that is, I own Quanta Services. I'm just looking, and again, Amazon, but Amazon's like, I got some good buys. I'm not super interested in buying more Amazon just yet. Soon, it's basing. Okay,
let's do SOFI TA, and then we'll get into Amazon.
SOFI, man. This is not an easy ticker, dude. Because like one day you think that like, oh, you've reached the low, and it's like boom, right? Because we're in that price discovery mode. So it's like as close to 14 or sub 14 as you can. It's 13.35 that I have a level at. Yeah, so it's similar, right? So like if we have this box, I still like it. The only thing about this and the rest of the lenders is like, I don't know if the lender situation, if the rates, I feel like we're kind of maxed out, right? Potentially. But if the rates, I don't hate SoFi here at all.
I think it's been holding 1350 very nicely, in my opinion.
Yeah, no, right? Yeah, it's 1335 or so. Like this is from this area. So like you remember when it was support over here and you've broken out of that and now we're retesting it essentially. Like I don't hate that. Do I know that it can go a little bit lower? Yeah. Right. Like a deep pullback could be into like 1170s. But I don't know that we even get that. And this has to be a very long view. This is a weekly chart, right? Because like that's I'm looking from a very long perspective. So monthly, if February were over 1550, this is actually going to be looking pretty nice for if it's next month. So if February SOFI is trending over the center line of this 1550, well, it's going right.
Well, they have earnings in 2 weeks, and that maybe is the catalyst.
Yeah, so we might get a little bit of this pop. So again, so you're below the 50-day. The next higher low, I really like, which might end up being about that $14 level again. So I'd like to see this area hold around 14 bucks. So if it rejects this, because you're right into this like area of congestion. So if it rejects a little bit and then whips back up like that, I would like that. The only thing with SOFI on earnings specifically is has this really weird tendency to do like this epic pop after hours like this. This is perfect. And they do the double beat and double skeet, right? Which is like, here's SOFI earnings, pop after hours. You celebrate early and you open up and you're bloody red. But if you sell, you're SOL because it eventually like recovers, right?
Correct.
So, so I'm not too excited about earnings. Here's another one, right? This is like every single time, man. Earnings, beat, boom, skeet, right? And it ends up being like a big duper. But again, right? This
earnings would have to fundamentally change the history of how the stock performs on earnings.
Yeah. So just know, if you're in SOFI, you should know this already because you've been through the ringer multiple times. This is the personality of this stock, right? Look at this beat, pew, skeet, right? I am hard pressed. Beat, skeet. I can't remember a time that it didn't do that. Look at this, Amit. I've gone through like 2 years worth of earnings now. I'm now looking at July 2023. And every single time it's a massive beat and then a massive skeet, which eventually bases out. Oh my God. How many times does it do this? Like, that's just what it is.
I think Noto's got to drop the hammer on the tech platform this quarter.
It was not until February or January 2023. It wasn't a massive skeet, but it eventually was.
Yeah. It's the tech platform. If they grow that top line.
Beat, skeet. Oh my God. It's so bad. Earnings. All right. That's one that it didn't. So if you have this kind of price action, or if it's flat, I mean, this is $4. What are you going to do at $4? But man,
well, what's interesting about a lot of these companies is they have to give full year guidance for Q4. So if SOFI, says, hey, we're only going to grow 20%.
I'm in 2021 now, and it's still the same. It's still the same thing. All right. Wasn't until 2021 where it wasn't doing, which is basically since inception. So since it's been a publicly traded company, it's been a beat and skeet type trade. That's just what's true. So
here's a question. If they don't beat and skeet, if they beat and they only keep going up, is that bullish for the chart long term?
Yeah, it's a total change of personality, right? So like the personality of the stock would have changed completely, which means that before it's more like a trading vehicle. So people are like, yeah, I'm in, I'm out, I'm in, I'm out, I'm in, I'm out. I'm essentially like, what's the word? Accumulating. But if they're done selling, they're done selling. And that would be a definitive change of character for the stock.